Hey everyone, welcome back to the channel. Today we are diving into a semiconductor showdown between FSELX and SOXX. Both of these funds are focused on one of the hottest industries in the world right now, semiconductors. But which one is actually being the better performer and which one will do better over the next 5 years? Before we get into it, I just want to take a quick second to say thank you to my first 11 subscribers. You guys are awesome and I appreciate the support more than you know. If you are new here, please take a second to subscribe. It costs nothing, but it helps the channel grow and means a lot to me, especially when I am showing my real portfolio. Okay? All right, let's jump in. And I've got a chart coming up that shows their performance side by side, so make sure you stick around for that. Okay, so my position and chart I will reveal, and you see my I want to be full transparency. I currently own 24.151% shares of FSELX in my brokerage account. I started this position, let's see, back in February 28, 2025, as you can see over here, with just about 3 shares. And I've been dollar cost averaging ever since. As you can see, almost every month I've added into my position, all the way to October, and it shows right here. It now my position is now, it now makes up about 6.67% of my entire portfolio. Okay, and so far I am up about 30.40%, or roughly 263.50 okay, as you can see over here. Now, I don't own any shares of SOXX yet, but since both FSELX and SOXX are semiconductor focused, I wanted to compare their performance. Okay, so let's go to this chart over here so you can see. So right here, let me see, on my screen you can see a quick performance chart of FSELX versus SOXX. Okay, and we will look at the year-to-date return, and the 1 year, 3 year, 5 and 10 year. We'll compare them, so you see clearly which one is ahead of the other. Okay, especially the long term. Okay, so let's talk numbers now. So year to date, as you can see, FSELX has returned 57% compared to SOXX 43.91%. Okay, that's huge difference. Huge difference. Okay, now let's compare 1 year return. FSELX has returned 67% compared to 41% for SOXX. Okay, and now 3 year return. So FSELX is averaging 68.47% yearly in the last 3 years compared to 42.28% for SOXX. The 5 year return, you will see that FSELX is 44.90% return. It's averaging in 5 years. It's averaging 44 per year, compared to 24.45% for SOXX. Okay, and now let's look at the 10-year average. FSELX 43.45 compared to 27.34% for SOXX. This is crazy returns, okay, over the long stretch of 10 years. So historically, FSELX has outperformed SOXX at nearly every time frame, despite that higher expense ratio. And I will tell you what, seeing this chart while researching made me realize something. I believe in this fund. Okay, let's go back here. I believe in this fund even more now. So while filming this video, I'm actually going to buy two more shares of FSELX right now. The market is down right now. So I'm gonna buy two shares. Okay, so I'm going to put, since it's almost at $47, I'm just going to put $94 to get two shares. Okay, so you can see right here I'm getting two shares of this. Okay, and let's go back here to my position. Okay, so when this doesn't trade until the end of day, and it will update, and that will bring my total position from 24.151% shares to 26.151 shares. Continuing to build on a position that's been performing really well for me. I'm gonna keep buying. Okay, now let's quickly break down both funds. Okay, so let's talk first about FSELX. That's the Fidelity Select Semiconductors portfolio. It's an actively managed mutual fund, which means a real person is managing it, picking and choosing semiconductor stocks. It has an expense ratio of 0.62%, a little higher than average, but you are paying for that active management, and it doesn't really pay a dividend. Its focus is purely on growth. Okay, so that's why the return is really high, as you just saw from the chart, right? It has higher returns versus SOXX. Okay, so now let's talk about SOXX. On the other hand, is the iShares Semiconductor ETF. It's passively managed, tracking an index called the ICE Semiconductor Index. It charges a lower expense ratio of 0.35%, and it pays a small dividend yield around 0.6%. So basically, SOXX is cheaper to own, but FSELX gives you active management and flexibility. Okay, so let's look at the future outlook. Looking ahead to the next 5 years, I'm confident FSELX will continue to outperform SOXX, and here is why. First, its active management has consistently beaten the index. Fidelity's team has done an amazing job identifying the strongest chips at the right time, whether that's Nvidia, AMD, or Broadcom. Second, FSELX has flexibility. It's not locked into a fixed index like SOXX. It can overweight higher conviction names or adjust when the semiconductor cycle shifts. And that kind of adaptability matters in the fast moving space. Finally, with the explosion of AI, robotics, and data centers, I believe semiconductors will remain the backbone of future innovation. And FSELX forecast active approach position it to capture the upside better than a passive ETF. That's exactly why I just added more shares while filming this video. Okay, so at the end of the day, both are strong options if you believe in the long-term growth of semiconductors. FSELX gives you active management and a proven track record of outperforming. SOXX gives you lower cost and simplicity. Okay, just remember, this video is not a financial advice. Always do your own research before investing. If you found this video helpful, hit the like button, drop a comment telling me which fund you prefer, and of course, don't forget to subscribe. Thanks again to my first 11 subscribers for the support. I'll catch you all in the next one. Bye bye.